Hi there, Shingirai here again with another update on portfolio performance over the past week. On a 1 week basis, 10 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from 0.51 for CBAM portfolio number 1 up to CBAM 5v2 returning 2.97% on a relatively risk-on week. We saw a strong recovery there for European equities on the back of news breaking that European gas reserves were higher than initially anticipated, with some going as far as estimating that European gas reserves will be at levels of 90% by the back end of October, and seeing European gas prices falling by more than half going into the winter. That would see Bailey Gifford European equity up 6.59%, alongside Schroeder European smaller companies up 5.57%. We also saw a strong week of performance there in another energy-related asset class, clean energy, as obviously we've been seeing the narrative that countries are beginning to look to alternative sources of energy outside of fossil fuels, and that being a key driver for clean energy, up 5.69% on the week. We saw some detraction from performance there for Hypnosis Songs Fund, down 3.20% on the back of obviously a rising interest rate environment, really beginning to dig into that dividend or royalty that you'd expect from royalties alternative asset investment trusts, and that would see performance down on the week. We also saw Rafa down, our total return position, diversified return position, down 1.78% on a 1 week basis, as we also saw there that surprise outperformance from European equities, which Rafa probably held a short position on and thereby losing out on upside capture. We also saw headwinds continuing to come for UK gilts, and that would see all LNG, all stocks down 0.97% on the back of rising interest rates concerns. But then again, in the week which was relatively risk on, you would see US equities also outperforming alongside our broader European equity exposure. But then again, that interest rate headwind being a negative for our gold positions. Moving on to a quarter-to-date basis, 3 out of 10 of the CBAM portfolios outperformed their respective benchmarks, with returns ranging from minus 0.38 for CBAM 1v2 up to 5.63% for CBAM portfolio number 5 on a relatively risk-on quarter, which has been a better quarter than we would probably have seen in quarter 1 and quarter 2. In terms of top performers, for reasons previously stated, we see our clean energy positions through iShares and Pictet returning more than 23% there on the quarter-to-date basis, and then for again some strong performance from our equity Indian subcontinent position, where really we see India as one region that has had positive improving PMI numbers over the past couple of months, whereas developed market PMIs have been contracting, and also India indicating an expectation of a 7% GDP growth for the year 2022, and therefore equity Indian subcontinent returning 18.82% on the quarter. In terms of detractors from performance, we continue to see those headwinds as a narrative for our Chinese equity positions, and that would see China through Bailey Gifford, Columbia Threadneedle, and HSBC detracting 8.19%. But obviously, we keep on looking ahead to that October 16 Chinese People's Congress, and also beginning to see some encouraging signs as certain regions or provinces that were previously in lockdown are gradually beginning to come out of lockdown, and that really spurring oil prices back above $95 a barrel this week as well.